Hi, I'm Candace Thompson with Coldwell Banker Residential Brokerage, and today I just wanted to go over some of the steps to home ownership. It's a great time to buy, and I hope that if you're a buyer out there, you're taking advantage of today's great opportunities. Step number one, you need to get your pre-qualification done. That's an opportunity where you can go and speak with your lender. They don't have to necessarily run your credit at that moment, but you can give them some basic information about what you think your credit might be, and then your income information. When you go to step number two, which is your pre-approval, that's the opportunity where you would actually sit down with your lender and let them pull your credit. You also give them your verification of your income documentation, and then they will look at that and put together a pre-approval. So that's a little bit more of a formal step for a buyer when they're thinking about getting pre-approved. This is also the time when you can go out and start shopping for a home. So that's when you contact me, Candace Thompson, and I will help you with your purchase. And step number three is the home search. So this is one of the fun parts of real estate, going in and looking at different homes and seeing, what you like, and if it's an opportunity for you to see if this home fits all the criteria that you've given me, and then also seeing if it will be a good investment opportunity for you, an opportunity for you to possibly appreciate the value, so that it can be a good investment in the long run. Step number four is when we would actually sit down and write up a contract, which is the purchase and sales agreement, once we have successfully found you a home. So at this moment, this is the time when you're usually very excited about the process and you found your dream home, in a home that fits all of the requirements that you want. And we would sit down and write up the terms and the conditions of what you want in the property. And then I also will work on negotiating those terms out with the seller's agent or with the seller directly, and making sure that we can get you what you need out of the transaction, hopefully have a win-win for you, so that you get the home that you want. Step number five, this is an opportunity where you actually do your written loan application. So your written loan application is usually once you have a contract where the seller has signed, you now have an executed contract. We will then take that contract, send that to your lender, and your lender will need to do what they call a written loan application for you. And this is when they may ask you to, again, get them their documentation on your loan, on your income. They may not have to pull your credit again. Just kind of depends on where they are within the time frame. Usually your credit pull is good for anywhere from 60 to 90 days, but your lender can advise you more on that. But this basically starts your mortgage process with the bank. And step number six is the documentation phase. Here, they may also ask you to provide your tax returns. On the back of my business cards, I don't have one in front of me, I was going to hold one up, but on the back of my business cards, it lists out some of the documents that you'll definitely need, such as your tax return, any debt information, so student loan information, child support, alimony, anything that's like a major debt that you might have some documentation on, divorce decrees, those types of things. That's the information that you'll be wanting to gather, and you may be given in step number six in the documentation phase. In step number seven, so we're under contract. A few things probably have taken place between you and the lender. They may have, requested letters of intent and, just different things. But some of the other things that next step you'll need to do is definitely going to be the appraisal. The appraisal is important because this is an opportunity for us to find out if the market value, which is the value that the buyer offers, is what the appraiser says the true value of the home. So the appraiser is a person that's a third party entity that will go out and they will justify our pricing, our offer pricing, or they will deny our pricing. So hopefully it's my goal that all houses praise for more than whatever we write the contract for. Sometimes in today's market like we're in, which is a seller's market, we're pretty much right about where the market is. So you may not get a lot of equity coming into the property, but hopefully you're in an area that will appreciate in value, and then you'll gain that equity later on in life. But, if the appraisal does not meet the value, then this is something that is a problem, and we would need to go back to the drawing table, renegotiate terms, typically with the seller, so that we can get our purchase price and our appraisal price to be equal. We need them to be the same for you to keep moving forward. Step number 8 typically is going to be right about the time of the title search. And some of these steps might actually run concurrent, like they might run at the same time. So the title search could be being done by the attorney during the same time that the appraiser is going out, but I'm just saying step number 8, this is something that's going to be important. And the reason the title search is important is because it's an opportunity for the attorney to go back so many years, and they're usually going back about 40 years or so, and taking the opportunity to really look at the history of who's owned that property or that land, when has it changed ownership, and what that ownership has done, making sure liens have been paid off. So title searches are very important, and highly recommend to all buyers definitely get title insurance, because that's an opportunity for you to protect that search that was done, but protect your interest in the property, just in case somebody comes back later on with a mechanic's lien. And we can go into details about different types of liens later, but definitely an opportunity for you to have different searches done through the title to make sure that you're getting good, clean, marketable title. Step number 9, and again, this is one that could be done concurrently through some of the other ones that I have just mentioned earlier, but your property inspection. I highly, highly recommend to a buyer have a home inspection. To me, it's an opportunity for you to evaluate the property, find out if the property, one, meets all of your needs, and some of your needs might be that you have up and running house, and that it's not going to cave in and fall apart as soon as you get in there, because that would not be a good thing unless you're buying a fixer-upper, that type of thing. But even on a fixer-upper, I still recommend having a home inspection, because it's your opportunity to evaluate the property, and it's the opportunity for the inspector to wave that red flag and say, hey, this is a possible problem. Let's get another person in here, like a specialist, to evaluate it even further, to give us some more information. Step number 10, this is the processor's review. During this time, the processor will package all the information that has been given to him or her. They will make sure that all the ducks are in a row, all I's are dotted, all T's are crossed, and they will prepare this package to go to the underwriter. The underwriter is one of the most important people throughout the mortgage approval process, because they're going to be the ones that's going to either give you a big fat check mark that says approved, or going to put a big X on there and says denied. So, it's our hope that all buyers that have gotten their pre-approval get that check mark and get approved. So the underwriter is definitely an important part of this process. Step number 11 is the underwriter's review. The underwriter is going to make that final decision on whether or not they're going to let you move forward. And when they're looking at your loan, they're not just looking at what you might call the nuts and bolts of a transaction. They're looking at everything. So they're looking at you as an individual, your ability to repay this loan, even if you were given situations that may not be favorable or operable, that you might get in a situation where let's say you hit a rough patch. They want to make sure that you're still going to be in a position to make some payments, even if a life event happens, so that you can still move on, and that they'll still get paid, during that time. But they're also evaluating the property, so that's why they look at the appraisal. Sometimes they may request certain inspection reports, such as the regular home inspection or a termite inspection, but typically they usually request the termite, depending on the type of loan, and only on certain occasions they will request the property inspection as well. But they look at those different things, and we're their eyes. We're the ones who are going out there seeing the property, so they want to know, hey, if this house has a big hole in the roof, we're the ones who needs to tell them, hey, this house has a hole in the roof. So the underwriter's review of the property and of you as a buyer is very important, because it's them that are saying to the bank, this is a good house, this is a good candidate to purchase this house, and in good faith they're giving you that loan, that you're going to make that payment for however long your term is, whether it's 10 years, 15 years, 20 years, 30 years. You're going to make that mortgage payment every month on time, and the underwriter is using their judgment to make that assessment based on the different things that they review and that they look at. All right, step number 12 is mortgage insurance. This varies based on your loan. So if you do certain types of loan, you may or may not have mortgage insurance. It's an opportunity for insurance basically to protect the mortgage in case you were foreclosed. Um, so in my opinion, there are lots of loans that don't have it, but this has been something that the government has said, hey, this is a way to protect us, especially when we just came from a market where we had so many houses foreclosing left and right. The government says, hey, this is an opportunity for us to collect an insurance, kind of like an insurance policy, so that if this person does foreclose, this can protect the bank and, that loan to a certain degree, that type of thing. Step number 13 is property insurance. Highly important. I always recommend to everybody, even if you're paying cash for property, get property insurance. For a couple $100 a year, that could be one of your best investments. You never know what could happen, whether a tree could fall on your house, you could have a busted pipe, somebody could get injured at your property, a flood, anything. But if you do have a flood, you might need to have additional flood insurance or some type of additional rider attached to your policy. But property insurance is one of those things where you actually are insuring your investment and making sure that what you're purchasing, if something detrimental were to happen or some type of hazard or natural God act happen, that your property is protected. Step number 14 is your final loan approval. Once the lender approves all of your condition of the loan, they'll issue your final loan approval and give you a clear to close. So this is something that we all look forward to, typically within a week or a couple of days right before closing. This is something that is to be celebrated, because that means all of your documents has been cleared and you have been cleared as a buyer candidate, and you are almost there to home ownership and about to get your keys in your hand. So it's a super exciting time when we get that clear to close. Phone call, email, letter, those types of things. Step number 15 is settlement. So typically in our world, we'll say your closing date, but it's really your settlement date. This is the time when you're going to come to the attorney's office. We are in an attorney state. So you're going to go to the attorney's office and you're going to sit down and sign your documents. The seller will sign their documents. And this is an opportunity where you can ask your final questions. Well, not really your final questions, because you can always ask questions, but this is an opportunity for you to ask the attorney like some good basic questions as they're going over these documents, because you're going to be signing a lot of stuff there. And it's also a time where you will bring your down payment fund. So however much that is, you'll bring those funds to the closing table and hand that over to the attorney. And you may have to wire that, or you might have to actually bring a certified check from your bank. Step number 16 is the funding. Typically by this point, you are not involved. And depending on what state you're in, I work in North and South Carolina. In South Carolina, we give our buyers typically the keys at the closing table. Way to go. In North Carolina, not so much. We don't usually give our North Carolina buyers keys at the closing table until after a few other steps have happened. So one of those steps is like step number 16, funding. A wire or a check for the amount of the loan will be sent to the attorney from your lender, and that's typically when a buyer in North Carolina, one more step, recordation too. But in North Carolina, would get their keys. But this is something that happens in both states. Funding, basically your lender will have to provide all of your additional not income documents, but all of your additional funds to the attorney so that they can close everything out. In step number 17, this is the closing. So this is where your closing really happens, when everything is recorded at the courthouse. So until the attorney either goes down there directly or sends a courier to the courthouse, whether it's in South Carolina, depending on what county you're in, or in North Carolina, depending on the county that you're in, that attorney will at that time send a courier down and they'll record you. That's when your closing actually takes place. So, and again, in South Carolina, our buyers will usually have received their keys by then, unless you're buying a foreclosure. Sometimes foreclosures will say you don't get keys until we're funded and recorded. But in North Carolina, definitely that's typically the case. You have to be funded and recorded in order for you to get your keys. So it's usually like a couple hours after closing. So I always recommend let's set our closing time for earlier in the day. Step number 18 is confirmation of recording. So confirmation is basically just a confirmation from the attorney saying, hey, we're recorded. Typically in North Carolina, they'll let us know, and that's a time when we can go back and pick your keys up for you, or you will go back and pick your keys up so that you can get the moving trucks and move on in. All right, step number 19 is congratulations, and it's time for you to move in. So I always will congratulate you at the closing, which is a couple of steps at the closing table, a couple of steps above this one. But, this is an opportunity where, again, you'll get congratulated again, and it's time for you to get your journey really started. Thank you so much to listening to my steps on home ownership. And again, I'm Candace Thompson, Coldwell Banker. And if you have any questions, call me 704-778-0779. Shoot me a text message, or feel free to email me, candace.thompson@cdcarolinas.com. Thank you.